Hello and a warm welcome from Frankfurt's main tower, the head office of Helaba, which I represent here for financial institutions. I'm Thomas Kors, and Matthias Melms here, the head of our DCM and syndicate, is with me to look at the primary markets over the course of the last year and give a little outlook for what we think is going to happen in 2026. Well, in general, it already feels like half of 26 is gone in the first 2 weeks, because we had record numbers of new issues. We had record oversubscription rates in the order books across all asset classes that we take care of, i.e. covered, senior unsecured and SSA deals. And in general, 23 billion of new issuance in Euro benchmark covered bonds alone. It's almost twice as much as we had in the same period of 2025. And coming from all jurisdictions, even from Israel, the first time I've noticed that in the form of a structured covered bond of 5 years. So with that fantastic start, let's go back a little bit into 2025. And Matthias, why don't you start us off with reviewing the covered bond markets?
Okay. We have seen issuance volume of 160 billion euro in euro-denominated covered bond benchmark transaction last year, and that was in the middle what we've seen the last 5 years. Not as good as 22 and 23 with close to 200 billion euros, but nevertheless a pretty decent year for covered bonds overall.
And if we sort of continue to draw the line, the red one here, that is, with the first couple of weeks that we had in this year, the trajectory points sky high. So that's a good thing. Yeah. How about senior in comparison?
When you look at senior prefers, it was an excellent year with a little bit more than 90 billion euros in issue volumes for senior preferred. It was not a record year, but almost close to a record year we have seen last year. Especially the issuance was driven by very attractive spreads versus swaps, but also versus other asset classes, so that the issuers decided to issue more senior preferred. That was foreseen at the beginning of last year. And for next year, we don't see that this trend will continue. So our expectation is 10 billion issuance volume less, with a little bit more than 80 billion.
Oh, so the curve will start turning down. Okay. What about non-pref?
In non-pref, we have seen another record year. Again, regulatory driven. MREL and TLAC requirements were fulfilled by the issuers. But we also think that 25 was now the top of the regulatory driven issuance that we have seen, with 136 billion. And for 26, we are expecting another good year, but not a record year, with 125 million.
I hope I see the day when we will not have another record year in SSAs every year, because it means they want our money. But in any case, so if we look at the SSA sector in general, I mean, that is driven by different factors, right? I mean, we're basically looking at new investments all over the place. Infrastructure needs to be sort of refurbished. Defense needs to be refurbished. And of course, there is all sorts of also social expenses that go into this direction. But that is also competition for covers, right? In terms of the investors it talks to. Yeah. So how is that going to pan out, and how did that work in the previous year, in 2025, yeah. And what do we expect in 26?
So, we have seen 400 billion in issuance activity from SSA issuers in the euro market. That was another record year. For 26, we're expecting another record year with 425.
I told you, I don't want to hear that.
billion euros. And that drives a little bit away the demand from investors, and need to absorb the demand for investors, and that was the reason why SSA spreads widened last year. And as they work a little bit as a floor, covered bond spreads are influenced by SSA spreads heavily. So although that covered bond spreads trade on a wider level than 12 months ago, we don't see so much potential for tightening.
But they're much tighter now than 2 weeks ago.
They are much tighter now than they were for most of the time last year and last quarter. But again, SSA and covered spreads have narrowed the last 2 weeks, and are trading on a level where we don't see any outperformance potential for covered bond spreads.
So if we compare the three general asset classes, covered, senior, let's include non-pref and pref in the same basket here, and SSAs. Where do you see sort of the ranking order going? Are the spread differentials going to widen, say, between SSA and covereds or not? And is the move going to come from everybody going up, but in different degrees, or everybody going down in different degrees, or opposite moves? What's your view?
So our view is that SSA spreads should be stable. Although we see issuance activity a little bit increasing by 5% in 26. On the other hand, we don't see much outperformance potential from covereds versus SSA, saying that what is a little bit a concerning point for us is are the tight senior spreads in comparison to covereds, in comparison to SSA. And we think that the widening potential is, from our perspective, in seniors.
Okay. So that's a potential credit crisis looming. Talking about potential things looming, what do you think are the major sort of worries that could rain on the parade of our markets here in 26?
So one macro factor that is concerning us a little bit is the sticky inflation that we see, especially in the US. So although we have the political discussion that the Fed could lower the interest rate, from a macro perspective, the inflation data is not supporting us. And another two concerns that we have from the political anchor are that trade and tariff discussions are coming back. We have seen in this last week where another argument was put on the table by Mr. Trump, that Iran argument.
Don't mention the man.
We see potential political turmoils that are not only increasing, but being there all the time. Greenland, Taiwan, Ukraine, that could cause volatility in the market. And last but not least, one angle of a potential crisis is, for us, private debt. We have seen some issues in the fourth quarter of 25. Private debt has built up dramatically the last years. And this is something that could lead to more spread widening, especially for seniors.
No wonders of not having to market one's asset, I can say.
Yeah.
But in any case, thank you very much for that nice summary and the outlook. In general, I think the outlook sounds rather more encouraging than discouraging. For myself, I prefer having political uncertainty in the future. That's what markets are for, and they can handle it, especially the covered bond markets. What's not so nice is having things like pandemics ruining our life, and I hope that's a thing of the past, at least for the time being. So let's look brightly towards 2026. The start was very promising, and thank you very much for watching us and listening to our words of wisdom. Thank you, Matthias. Thanks for being here.
Thomas.
Until next time, bye-bye.